Welcome to the Falls Homefront, where Wichita Falls leads in North Texas real estate, business, and life. I'm Tim Lockhart, retired Air Force officer, realtor, and your local real estate and business strategist. Every week, I'm shining a spotlight on people, places, and opportunities that make our community thrive. You'll hear real estate tips, market insights, and inspiring conversations with local leaders, entrepreneurs, and fellow military veterans. Whether you're a homeowner, investor, military family, or brand new to the area, you'll get the expert advice, community connections, and local insights you won't find anywhere else. Let's get started. Welcome back to the Falls Homefront, where we talk real estate, business, and the stories that make Wichita Falls in North Texas such a special place to live, work, and serve. I'm your host, Tim Lockhart, retired Air Force officer and realtor here in the Wichita Falls area. And here we believe that good information leads to confident decisions. Today's episode is going to be packed with value, especially for those of you who invest in real estate, run a small business, or just want to keep more of what you earn. I'm joined with someone who has made a career out of simplifying a topic most people run from: taxes. Chris Picciurro is a CPA, MBA, PFS, and ARA with more than 20 years of experience helping taxpayers. He's a co-founder of Integrated CPA Group and the founder of Teaching Tax Flow and the MRR Institute, national platforms built to make tax strategy understandable for everyday people. He's spoken nationally, served on the Intuit Tax Council, and worked with organizations like NATP and the Michigan Association of CPAs. Chris, I'm excited to have you here today. Thanks for joining us.
Tim, it's an honor to be on your show, and I appreciate it. I was able to check out some of your episodes, and Wichita Falls sounds like an amazing place to live. I'm coming from Franklin, Tennessee. So if you're not familiar with this area, we are just about 15, 18 miles south of downtown Nashville. We absolutely love living here as well. My wife has family in Texas, and we've got a lot of clients in the Metroplex area and beyond on our private CPA firm side. But yeah, I'm very excited to talk to you today. I hope that the thing we call taxes to some people can maybe a little less scary, and hopefully we can empower some people to make decisions, because at the end of the day, you have two choices. You can do nothing as far as tax planning and strategy, and the IRS, what we call your involuntary business partner, picks your tax, or you do tax planning and strategy, and you have a say in picking your own tax. So our goal when teaching tax flow is to be the voice of tax planning, and also to help taxpayers legally and ethically reduce the tax they pay in their lifetime. Now, you're in Texas and I'm here in Tennessee. So luckily, Tim, we don't have a personal state income tax. So one of the reasons we decided to relocate. I'm originally from the Detroit area, but we've been down here for about a decade. So even sometimes residency planning alone can be a good source of tax planning. We see that a lot. A lot of people moving from those higher tax states are usual suspects of California, New Jersey, New York, Illinois, and such, moving down to the Texas and Florida, here down in Tennessee. Some people are moving to Nevada. Again, we say don't let the tax tail wag the dog, but that could be a significant portion of not only your income, Tim, but there are some states out there that have a pretty nasty estate tax as well. So we've got to navigate those waters, and it's a team sport. But yeah, I'm happy to be here, talk about what's going on in the tax world, and appreciate people that have tuned in. Hopefully you can take away one or two actionable items that could keep some more money in your pocket. And one of the things we talk about in teaching tax flow is that again, we created 3 laws. We figured we can't have 10 laws. We've already got 10 commandments, so we got to just stick to 3 pillars. One of them is that your tax return is a verb, not a noun. One of them is that your tax flow and cash flow are different. We'll talk about that in a few minutes. But the other one is, tax agencies are your involuntary business partner. So I want everyone to think before we start diving in, tax laws are written to encourage and discourage behavior. And that could be economic, social, environmental. Ultimately, that's what's happening. So we are CPAs and enrolled agents. We should be your Sherpa, walking you and navigating through the tax mountaintop.
Let's start broad. When talking to real estate investors and small business owners, what are some of the biggest tax opportunities that people are just leaving on the table?
Sure. So let's talk about real estate investors first, because ultimately, real estate investors, in our private CPA practice, our niches lean towards real estate. So this is something that we work in a lot. But with real estate investors, it gets tricky because we have to figure out what their objective is. So in other words, are they more passive investor that's buy and hold? Are they active? Are they doing house flipping? And that gets tricky because I mentioned cash flow and tax flow are different. Sometimes you might run into a new house flipper and they heard on TikTok that they could do a 1031 exchange, and they come into their tax professional's office and say, hey, I flipped a house in Wichita Falls, but don't worry, I took all my profits and bought a piece of farmland outside the city, and I'm going to do something there. So that's not a 1031 exchange, and house flippers can't do 1031 exchanges. The first thing is just understanding what your goal is. And as far as things left on the table, so for real estate investors, if I look at the category of you're an active real estate investor, and I don't want to get too technical, but meaning that your activities are considered non-passive, using cost segregation studies to accelerate the depreciation deduction now with what I refer to as OB3, the One Big Beautiful Bill Act. Tim, are you a Star Wars fan? Me too. I'm out of the closet with being a Star Wars fan. I've been outed. Why do I call it OB3? A lot of tax pros call it OB3, but I just love Obi-Wan Kenobi and C-3PO. Right. So if they had a baby, that'd be really weird. But if you combine them, you got OB3. So with One Big Beautiful Bill Act, we have bonus depreciation back to 100%. So that means that if you are a non-passive real estate investor, or if you own and operate your own short-term rental properties, you might want to think about the bonus depreciation and cost segregation studies. For real estate investors, the ones that comes down to your liquidity, you want to consider 1031 exchanges if you're more passive, if you have properties you sell, or do you want to reposition your portfolio. I'm going to say real estate investors. Let's talk about people that aren't full-time real estate investors, people that own a primary residence. Owning a primary residence is one of the best tax plans you could ever imagine, because you have two low-hanging fruit pieces. The number one is what we call the Augusta rule. Now, if you scroll TikTok, you're going to hear this misapplied. One of the things we talk about in teaching tax flow is that ideas are cheap, implementation is valuable. So the point is the Augusta rule, implementing that could be very valuable. So I'm not 100% familiar with Wichita Falls, but it might have special events. It might have a fair, it might have something going on there that's a major event. So here in Franklin, Tennessee, we are next to Nashville. There's always stuff going on, but we have a huge music festival called the Pilgrimage Festival. We live 3 miles away from the Pilgrimage Festival. My wife's family is in Galveston, Texas, actually. And so we go there for every Thanksgiving. And what I do is we rent our house out when we're gone for a couple weeks. And we could pocket that up to 14 days, fair market value rent, tax-free. And now, are you comfortable with people wandering around your house? I'm not putting it on Airbnb. It's usually, a lot of times we have people that, hey, I'm coming in for the concert. I don't want to be around here when there's 100,000 people in our town. So if you own a primary residence, you might want to think about the Augusta rule, but also let's think about the Section 121 exclusion, meaning if it was your primary residence home for 2 of the last 5 years and you're married, you can exclude up to $500,000 worth of capital gain, up to $250,000 if you're unmarried. And I want to bring you to that 2 out of 5 years. So Tim, I'm going to put you on the spot on your own show. Okay. What is the term for someone that is a U.S. member of the House of Representatives?
Is it 4 years?
Good. That's pretty close. 4 years if they get reelected, but it's 2 years. So my point is, right, I know it's tricky because the Senate 6 years, but the point of that is, why do we have to live in somewhere for 2 out of the last 5 years? Because if you win a house spot, you go to DC, you buy a house, you live there for 2 years, you might not get reelected, but you could sell your house as it's like a game show. You didn't win the game show, but you get a prize. You sell your house in DC, move back to Texas, and up to $500,000 gain is tax free. So that's what I'm talking about. You've got to read through the tea leaves. You've got to look at why these rules are written and use them to your advantage.
And
I know I went sideways.
It's not the last 2 years. It's not the last 2 years. It's 2 out of 5 years, correct?
You nailed it. 2 out of the last 5 years. Now, if you start renting the property when you're away, then you have some mixed use. But I know that this is common for military families. Think my dad was in the Army, and he's still with us. He's not in the Army anymore. And so let's say you're in the service, you come back, you buy a primary residence. Thank goodness there's great VA loans available. And then you have an opportunity to go overseas. If you've lived in that house for 2 years, then you rent it for a couple of years and you go overseas, and then you come back. And let's say you started a family and you say, I'm going to sell this property. You're going to still be eligible for the Section 121 exclusion. Now, there might be some depreciation recapture from when you rented it, but all in all, you'd still get some favorable tax treatment. So yeah, let's use the rules to our advantage. But I know I went real estate and in more individual provisions, but what I want is almost anyone listening or watching could use the real estate to their advantage in some way, shape, or form.
Yeah, and there's some advantages to having a home office. Could you talk about that a little bit?
Absolutely. So yeah, the home office deduction is something that I really enjoy. I'm coming from my personal home office here, and I love it. And just like you, I've got a little podcast studio set up, and so a lot of people are afraid of home office because for some reason there are people out there that think that it triggers an audit. And my thought is, even if it does trigger an audit, if you have a legitimate home office, who cares? As a CPA, we prepare tax returns legally and ethically. We're going to fight to make that tax as low as possible. However, we have to assume it could get audited, right? And so if that's the case, big deal. So you took home office, but you have a legitimate one. So for home office, it has to meet 2 criteria. It has to be regular and exclusive use. Now, that doesn't mean that you don't have other places that you work. So if you're a realtor, or if you are, let's say you might have a desk at some office somewhere, but your primary place of business is your home, and you can establish that, then you could be eligible for the home office deduction. And the other thing to remember is it doesn't have to be an entire room. It could be a portion of a room as long as it's regular and exclusive use. Now, it can't be, oh, I put my laptop up on my kitchen table once in a while, and I'm single, I eat out all the time, so I never use a kitchen. No, that doesn't work like that. So regular and exclusive use. And if you qualify for home office, you get 2 options. You could either take a percentage of your actual expenses based on your square footage of the home, or you could take the simplified home office deduction. Now, that's not as generous. It's $5 a square foot, up to 300 square feet. However, I'm going to keep going on home office because it's important to take the home office if you're eligible for it for a couple of reasons, in my opinion. One, so Tim, let's say you worked out of the home, right? You're a realtor. You have business. Let's say you have someone looking for a new property. You drive, show them a property, and you show them a second property, a third property, and then you drive home. Commuting miles aren't deductible. So if you don't have a home office, the first drive and the fourth drive are just commuting. But if you do have a home office, the first, second, third, and fourth drives all deductible. So that just with that mentality, thinking, okay, and it's 70 cents per mile as a standard mileage deduction. Again, that's pretty generous. Oh yeah, it's pretty generous. It's been so with home office, you can, if you're self-employed or if you're on a single member LLC, taxed as what's called a disregarded entity, you file that home office deduction right on Schedule C of your Form 1040. If you go actual expense, you could use this Form 8829. I'm going to stop saying form numbers because I'll probably screw it up off the top of my head. Now, that being said, if you own an S corporation or a C corporation, there's a ton of tax planning if you have a home office. You can actually create an accountable plan and have the entity reimburse you for the fair market value of the home office tax-free. So we were just working on a tax planning case for a client. He lives in the Chicago area in a very nice part of town, and he has a nice sized home office. He works out of the home. And if he were to go to a shared home office space, like a Regis office or something like that, and it would cost them about $900 a month to get a comparable space. So I said, why don't you just reimburse, have your S Corp, you have to have what's called an accountable plan, reimburse you $900 a month for the use of home office. The S Corp's now getting a well over a $10,000 deduction. He doesn't pick up that income because it's considered a non-taxable employee fringe benefit. So if you're watching or listening and you own an S Corp or C Corp, think about that accountable plan. If you're self-employed, you're going to take that on your personal return. Or if you're a partner in a partnership, so let's say, Tim, you and I created a property management company and we didn't have a real office, like a physical office. We both worked out of the home, and the company said, look, I'm not going to reimburse you for you. You're responsible for your own home office, your own cell phone. Then I could take a home office deduction and offset my K-1 income.
All right, great. Thanks for answering that. Something that you teach a lot is the idea of finding a strategic CPA, not just a tax preparer. What should people look for in a great advisor?
That's an amazing question. We just did a reel on where I walked through an analogy of picking your tax professional is like finding the right shoe. If you have a return that you feel that you're going to get the best result possible on your own, then you don't need a shoe. If I'm walking around my house on carpeting, I don't necessarily need shoes to protect my feet. Hey, if you've got one little wrinkle, maybe you get some flip-flops. But if you own a business and you need a lot of planning, a lot of income, a lot of assets, a lot of moving parts, you need a big boot. And actually, fun fact, Tim, my favorite boot I bought 15 years ago in Fort Worth. So when I was there for a business trip. It was the one time I remember we were still living in Michigan, and I went to this boot shop and I'm like, I love these. I've never had cowboy boots. And the sales lady's like, I'm like, but I didn't check. I was there for work. I didn't have space in my luggage. She goes, well, just ship them to your house. I'm like, in Michigan? No, okay, fine. That's cool. So they shipped them. And it was the one time where we got a delivery at home and it was for me and not my wife. She's like, what did I order? And of course I'm like, hey, guess what? I finally got something. But so if you do need a lot more protection or a more complicated situation than the boot, you're in a tough situation right now as a taxpayer. According to the American Institute of CPAs, 75% of CPAs are retiring in the next 15 years. And we are also struggling to bring on more enrolled agents as well. I love taxpayers working with enrolled agents. Enrolled agents have a lot of tax knowledge and are a complement to CPAs, and they do an amazing job. And they have this very similar codes of ethics and training in the tax side. So yeah, what should you be looking for? A great fit. I wouldn't focus so much on price. There's this whole concept of price versus cost, right? So yes, someone might be able to prepare your tax return for a lower price, but what's the cost? Did you take all the deductions you're eligible for? And also, you've got to be organized. And I made the mistake just recently. My wife and my youngest son were out of town, and we have 16, 15-year-old and 12-year-old. And my 16-year-old and I, he's got a better social life than me, but we went out to go watch some college football on a Saturday night. And I said, let's go to my favorite sports bar and grill to watch. So we go, and we're so excited. It was like a 45-minute wait. And I'm thinking, dang, I always just walk in here on a weeknight if I want to watch a game or my wife and I want to do something. So we had to go to another place. And I thought, that's what people do all the time with tax professionals, trying to find someone available. Now, we already know we have what's called a pipeline issue, meaning we're not having many people come into the profession. And we've got what we call a retirement cliff. And trying to find someone to prepare your tax return in February and March you're going to get the worst result possible, right? And there's not too many things you could do at that point to change money or facts. Maybe you can then there's some tax strategy implementations you could do after the fact, put money in a retirement account or that sort of stuff. But for the most part, the hay's in the barn. So to answer your question, what I would be focusing on is look for the right fit. Look for someone that fits your communication style. So for our private CPA practice is a virtual firm. Clients upload things through our secure portal. They're comfortable doing business virtually. They want the best result possible, and they're comfortable that that's how we do it. If you're someone that likes to sit down across the table and talk, and you're not comfortable scanning things or sending things through a portal, then that person's not going to be a good fit for you. But understand that, and I don't want this to come across harshly, but if you're a taxpayer and the supply and demand curve is not in your favor right now. Let's just put it that way. And some of the things we teach is like, we only end up working with about 10% of the people we talk to, actually, as a private CPA firm, because I want to make sure they're a great fit, and I want to make sure we can get the best result possible. So, yeah.
Yeah, that's good. Instead of just coming to your CPA with a shoebox of a whole bunch of receipts in, say, April or March, what's a better strategy? How often should I be talking to my CPA?
I love that question. So, a couple of things, Tim. One thing I want everyone to understand is the goal of tax preparation is to legally and ethically get the best result possible, meaning the lowest amount of tax possible. That doesn't mean fastest. That doesn't mean I have to file by April 15th. Almost 2/3 of our private CPA firm clients, we file extensions for, and we do that purposely. Now, the April 15th deadline, that's the date that you have to pay any tax you feel is going to be due for the previous year. You don't have to file by then. So if you're scrambling around in March and April, take a deep breath. My advice is make a tax extension payment and find the right fit. Don't just feel like you've got to get things done. Think about it like you're flying, right? Think about it like, okay, if I've got to jump on an airplane tomorrow, I'm not going to I might have to take a layover I don't want to take. The cost is going to be too much. It's just not, and it's going to be, and I might be running late for the airport and it's going to be stressful. Don't you want to just feel relaxed and feel confident? Because you don't want your tax professional stressed, filled up with 20 cups of coffee. If you went to the doctor and hey, how's it going? Oh my gosh, I'm so tired. I got no sleep. I've got all these returns. You'd be like, do I want this person examining me and working with me? No, be a little more patient, have some more grace. Don't be afraid of tax extensions. How often should you talk to your CPA or enrolled agent or tax professional? Is really as much as you need to, as much as prudent. So each firms operate differently. So we operate on a subscription model. So our clients have unlimited communication with our team. Now, it's not the least expensive model out there. We encourage people to talk to us because what we don't want to do is we don't want to put out fires. So the answer to the question is, if you are serious about tax planning and strategy, at least once, and I probably wouldn't make that the same time when the tax return is being prepared. If you have a life event or a big decision to handle, then don't be afraid to book a call or a meeting with that tax professional, and you're going to get what you pay for. So don't be afraid to pay for that advice. If you're thinking about selling a rental property and you're not sure if you should do a 1031 exchange and you're just guessing, it's worth the call. It's worth them to run some numbers for you, because you might, but cash flow and tax flow are different, right? So Tim, you might let's say you own a property that's worth $400,000 and you have a $200,000 loan on it, and you can go to sell it. You're going to walk away with $200,000 approximately. That doesn't necessarily mean that's how much tax you pay. How much tax you pay is not correlated. If you paid $350 for the property and you've been depreciating it, but then you might have passive activity losses, we've got to factor that all in. So that my point is that decision of, hey, if I sell this property, should I think about a 1031 exchange or should I pay the tax? Don't just assume you're paying tax on $200,000 in my example. Have someone take a look at it. We're talking a little bit about pre-show about football and the Dallas Cowboys and the NFL. And what we want to think about is call the right play for the right down and distance, the down and distance being your tax situation.
Yeah, that's good. Yeah, so I've heard different recommendations between quarterly at least or twice a year or something like that, but definitely not like just before the deadline. No, that's definitely not when you want to be talking to or the only time you're talking to your CPA.
Agreed. Yeah, and if you're right up against a deadline, the best thing to talk about would say, okay, it's it's March 28th. Maybe I'm waiting for a K1. Maybe you need time to get your information together. Again, the best result possible is your goal. Hey, because the cool thing about making an extension payment is this: when you file, if you overpaid, you get it back. There's no penalties, there's no interest. And if you think you're going to have quarterly estimates due for the next year, then my advice is intentionally overpay your your extension payment and just carry that forward. And those are the type of conversations you want to have, because you got to realize too that tax professionals, I wish I had a crystal ball, but I don't. So we're not mind readers. So if someone says, I can't tell you, my CPA didn't tell me this. Wait a second. I didn't know you bought a new vehicle that's an EV. Now, as the tax professionals, we have a process. Your process is your product in our business. So we have a process where we give clients a survey, and all the questions are very meaningful to say, did you buy digital assets? Did you sell them? Did you buy a new car? And now with the OB3, we expect over 30 million people to take a deduction that's brand new in 2025 that we've never had before. And so those questions need to be asked. So definitely be organized, and extensions were created for a reason. So use them if you need it. Yeah.
No, that's good advice. You created Teaching Tax Flow, and that's become a big help for a lot of people. What inspired you to build a platform like that?
Oh, thanks for asking that. I love helping people out, and I love empowering people and connecting people. And there's nothing really out there in the tax world focused on tax planning and strategy. And when I started our tax practice CPA firm 23 years ago, I thought bigger was better, and we were cranking out thousands and thousands of tax returns. But it was a complete burnout, and I missed the first few years of my two older kids' lives. And I thought, it's not going to work. So I changed things up, started focusing on tax planning and strategy, started working with a lot less clients on more of a subscription model. That being said, I still wanted thousands of people to say, I heard about Section 179, this 179 deduction, and now I can send them a piece of content, maybe a podcast episode, maybe just a reel, maybe a explainer about that, and feel good that we help them. So really being able to empower and help as many taxpayers as possible is the motivation. I'd be in my higher tax bracket myself if I put all that time into the private CPA practice, but ultimately I've been blessed with everything I ever need in life and more. And I feel like it's a calling to give back and to, like I said, empower people and create a community, and a community that connections are made. So that's my motivation.
That's good. How can people connect or find that information?
Sure. So you can find Teaching Tax Flow. We have a podcast. It's going to be on all your major podcast outlets. We also have a YouTube channel. We launched that a little over a year ago fully. And that's, I think, the best place to start. So it's just Teaching Tax Flow. If you're interested in, so that's going to have a ton of different content. We have all of our Teaching Tax Flow is on pretty much every social media as well platform, but we live heavily on YouTube, and then we have a private Facebook group. So we started a private Facebook group. If you're listening to this, you're invited. It's called Defeating Taxes. And if you just go to defeatingtaxes.com, and as long as you click a button and say, I'm not going to be a knucklehead and I'm going to be nice to people, that is our forum for anyone. I think we've got well over 2,000 people in that group now to just ask tax questions. And once a week, I'll post and say, hey, what questions do you have? It's a great way to connect people. But for me, as a CPA, it's a great way for me to know what's going on, what's the pulse of the taxpayer, and what drives our content. So I would say, yeah, jump in our Defeating Taxes private Facebook group. Follow Teaching Tax Flow, especially our YouTube channel and podcast. And then if you're interested in potentially working with our private CPA firm or having a chat with us, it's going to be a really complicated URL. Just kidding. It's 2025.tax. So we're going to be filing our 2025 tax returns. 2025.tax is our landing page. And you could, if you want to learn more about our private CPA practice.
All right. Nice. Chris, before we end, what is one piece of financial wisdom that you think each listener needs to hear?
Oh, that's a good question. You have a lot of good questions. One piece of financial wisdom is going to be, it might be more life advice. Just trust your instincts and focus on building what we call your personal board of directors. Those are going to be the people around you that help you make financial and tax decisions and keep you accountable. Sometimes it's a spouse, but some people on your personal board of directors could be a tax professional, a banker, a realtor, a lender. Having those people in your life helps you. And also just kind of just creating a plan and figuring out why you're doing what you're doing. And so I heard I should do this. I should do that. Make sure it fits with what you want to do. And yeah, trust your instincts and do what's best for you. And that's my best advice.
All right, perfect. This has been great. Thank you for taking the time to really explain something that a lot of people think is so complicated in a simplified way. And for people listening out there, if you want to learn more about real estate taxes or what's happening around Wichita Falls and Shepherd Air Force Base in North Texas, make sure that you subscribe and share this episode with someone who could benefit. I'm Tim Lockhart, and this has been The Falls Homefront, and we'll see you next time. That wraps up another episode of The Falls Homefront. I trust today's conversation gave you some useful insight for your real estate journey and life here in North Texas. If you enjoyed it, follow the show so you never miss an episode. Like and subscribe on YouTube. And share it with a friend, neighbor, or fellow North Texan who might enjoy it too. For more resources, local insights, real estate tips, and how to connect with me, head over to timlockharthomes.com. Stay tuned for more stories, strategies, and connections that help you thrive in Wichita Falls and beyond.